Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Tuesday, the 23rd of May, 2023. All right, there's just so much going on. It looks like Ron DeSantis tomorrow is going to throw his hat in the ring. Elon Musk is going to do something about it on Twitter. Then, before we get to these quotes and all, one of the things we have are these sticking points, and there's disagreement on spending between the Republicans and the Democrats. I'm talking general spending, whereas they don't want the Republicans' spending to increase in any manner or stay the same. They want to see it reverse. Defense versus social. One of the things that the Republicans want to see is an increase in defense spending, but where's the money going to come from? Social spending. Work requirements, that's been going on as to what you have to do in order to get some of the government benefits. That's a big argument. And Congress getting ready to leave on Thursday for their Memorial Day holiday. Now, another thing that's happened is we're starting to hear, this is a bunch of you-know-what. That Janet Yellen saying June 1st, we're going to be out of cash. Some Republicans are saying that's not true. If you look what the big bank boys are saying, they're thinking it's much closer to the, let's say, a third into the month to halfway through the month of June. So what do they want to do? They want to play chicken. And that's what you're at right now. You're at the game of chicken. Who's going to blink first? And that is what I said yesterday. If you saw the press conference from Mr. McCarthy, it was not a good press conference. I didn't see him agree to anything, and not one of the Democratic demands. And now you're seeing that my analysis of that was on the money. Gold getting a small bid today, but that's until the dollar reopens. We'll see what happens. What we've been getting is as the dollar keeps going higher, because traders are getting very nervous about as we get closer to that D-Day, the X-Day as many call it, where we run out of cash. You want to own dollars versus a number of currencies. We keep watching the interest rate futures go down, which means real rates going higher. The 2-10 years back to about 64, 65 level. On the energies, the API report that came out at 3:30 shows a massive draw in every category of the energy, and you're getting a bid. And this morning, by the way, I got quoted in Dow Jones on it. I said comments as to what the Saudis were saying. And it's, if you think you're playing bluff poker with them, get ready. They're going to possibly give you another cut in production. So you put that all together, and it got it to be an interesting day. Now, one of the things we've been talking about is with these headwinds of rising interest rates, a strong dollar, where might the gold go? And we still have that possibility of getting back to the 18-week moving average of closes. Now, this is a chart of only closing prices, and that number is 1941.60. When we come to a June daily bar chart, you can see how the market has slipped down, but it's suddenly finding a little bit of traction. That's all it is in this 1955.80 level. If we look to see where resistance is, it's above the market at 208.70 with support 1952.20, the 100-day average of closes. When I put on the chart the Bollinger Bands, well, what did you go to today? You hit it a couple of days ago, you bounced away, you came down today, you're getting a bounce. And that's pretty strong support, 1953.20 to 1952.20. Do I think that's a buy zone? No, I think you're entered the cover short zone for the bears that have been out there. That doesn't mean they'll cover all of them, but that's what I think they're doing. And why? Well, let's take a look and me explain this. You can't count that tonight, Wednesday evening, for the trade let me put it this way, for Tuesday evening for Wednesday trade, I said that wrong, that these slow stochastic numbers will be there. You got to back off to the close of Tuesday. And when you do so, both numbers were under 20. They were under the 20 level the day before, but not the day before that. So tomorrow's the day that the market decides, is it going to embed? Now you'll say, Ira, what's the big deal if it embeds? Well, when a market embeds, it converts from oversold to locking in a trend until the red line closes back over the 21 level, the way I teach this. When you do embed, it is not uncommon for a market to latch on and try to work even lower, and when you get a bullish embedded, to go higher. often you do just this. You get down to that oversold area and you bounce. So tomorrow is a key day in this market. If nothing happens and if everybody's going to leave for Thursday vacation, think about this. They leave Thursday. They're not there to do anything. I know you're going to tell me the negotiators can still work everything through. Sure they can. And I don't say that facetiously. Sure they can. Will they's the first thing. They're only working 2 hours a day. I don't want them overworked. So on those 2 hours a day, and I'm sure there's sweat coming from the brows, they want to go to their families too. Everything is pushed back. That's the reality of the situation. We've been here. We've seen this before. Keep your eye on how this plays out. In the gold-silver ratio, you can see gold is gaining on the silver market, and the silver market is fighting a battle at the 100-day average. It already has the embedded reading. So what I think is happening is the pros are turning seller against that number, and they'll say, if we're going to go down, 22.86.5, next stopping zone, get a close over 21, and I think they flip the other way, and they say they don't want to be short anymore. In the copper market, are you going to embed? Well, I think you're there. You can't count Wednesday, as I just showed you, but you can certainly go to Tuesday. Both numbers are under 20. The day before, both under 20. The day before, not. I thought they were. They're not. So just like in the gold market, are we going to embed tomorrow? You lock in these bearish readings, you go down even further because people will say, no, this is terrible. The U.S. is going to see the Moody's and S&P probably sooner rather than later have to step in and downgrade U.S. debt, puts interest rates even higher than they are right now. It spooks the markets. They've been very good, but at the end of the day, their reputations are on the line. Years ago when they did that, I remember they got criticized for moving too fast. They're trying to avoid that. I'm sure they put out their book from 12 years ago and they're going through it from 2011. When did we downgrade? What did we do as we got to that point? Just remember how that all works. In the platinum market, you have a higher high, lower low, oversold. I don't see anything there. In the palladium, lower highs, lower lows. And you're looking at a market that is now oversold, could go lower if things get real nasty, the lower Bollinger Band's a target. If the market decides to rally, the first theoretical resistance point is right here, 1494.90, let's call it, the 18-day average of closes. If you were to get over 1535, you break this downtrend that's in place. And that's the thing you always have to look at in these markets. If there's a breakthrough between the Democrats and Republicans, the market will get a whoosh on it. Markets that have been breaking because of this will go the other way. Those markets that rallied on the fear trade will reverse course and fall back on you. But I don't see that you're at that point magically right now. Generally, you can read this where they're at least in meetings, they're at the White House, they're talking to their parties. Everybody's gone home. It appears to me an old Texas standoff. In the dollar index, you might be headed to the 103.67. So, looking back at this, when the market got up here, I said, you're at your first key resistance zone, and nothing has changed between now and then. Then I went away for a few days, and coming back, you're just climbing. So you can see the world is saying the dollar, you got to run to it for safety. U.S. Treasuries, that'll be something else people want because at the end of the day, they know the U.S. government will find a way to pay its debt on those. I believe that will happen at the end. I don't like the idea that we are sitting here, if you will, fighting to find out, Ms. Yellen is wrong. It'll be January 8th, 9th, 12th. There's enough money. We can keep this going until we see the white of the horizon. Who's going to go blinky on you? That's basically what's going on. So in the metal markets, pressure until we know more across the board. And that's how I'm looking at everything. In the meantime, I'm Ira Epstein. If you'd like to see any of our free offers, just move your cursor to the top up here. An icon will appear on your PC. It'll take you to free offers on our website, or you can go to our website at iraepstein.com, free offers. I'm Ira. You have a good day.